All right, welcome back. So here we have the 3-1 work together, journalizing some transactions in the multi-column journal. So before we get started, be sure to hit that subscribe button below so you don't miss out on any videos that might get posted or any updates. So make sure you click subscribe. Also, that helps support me and support the channel with your help for you for accounting worksheets. So what we have here to start out with in the 3-1 work together, we have two transactions. And as was explained in the previous worksheets, each transaction affects two different accounts. So our first transaction received cash from owner as an investment, and our second transaction on April 2nd paid cash for supplies. So also, if you notice up here, we have another tab that says COA. So that stands for Chart of Accounts. So we'll click on that, and you'll see an official form called Chart of Accounts. This one's for Dirk's Copy Center. So you can see we have our account names, our official account names that are going to go on the worksheet. And you can see the accounts are numbered. So now we have account numbers for the accounts. And those will come into play when we get to the general ledgers. And the other thing to notice on the chart of accounts is our different types of accounts are grouped together into similar types. So all of our assets are grouped in the 100s for the account numbers. So all the assets, remember, anything of value that's owned by the company. Then the liabilities, those are the bills that the company owes. Those are always going to be in the 200s. Some larger companies, those might even be in the 2000s. We have equity, where that's the owner's interest in the company, the financial interest of the owner in the company. Revenue, that's just going to be the one sales. And then we have expenses in the 500s. So all of our expenses are in one group. So we'll get down to the directions. Norma Dirks owns Dirk's Copy Center. Using the information provided, journalize each transaction completed during April of the current year. Use page 1 of the document. Source documents are abbreviated as C for check and R for receipt. So let's start with our first transaction for April 1st. So put in the date, APR, and make sure you have to put in the period there or it'll turn red. Or not. There we go. It turns red, so you have to make sure you have to put in that period. So if it's turned red on you, that's something easy to forget, is putting in the period for the abbreviation of April. So now we've received cash from the owner as an investment. So let's start with the owner. So we'll click over to Chart of Accounts, COA. And if you remember from Chapter 2, and then accounting equation, that increase in value of the company goes under the owner's capital account, under that umbrella of owner's equity. So our official title, account title, is going to be Norma Dirks Capital. So we'll put that on the account title line. Norma Dirks capital account. So now we're going to go back to the transaction. So that's receipt 1 is the source document. So our document number we'll put in here, R1. So now we've got our capital account under that owner's equity that's on the right side of the equal sign on that accounting equation. So remember, on the right side of the equal sign, any increases in value is categorized as a credit. So we'll put $2,800 in as a credit. And then just to give you more information about the differences here with the multi-column journals. So typically, regular accounts are going to go on the main lines here on the journal. So each of the different accounts are going to go in here in the account lines. But since cash is so often involved with the transactions, instead of using more lines in a journal for cash just gets its own columns added on to the end of the journal. So cash has its own columns. Plus, it makes it easier to compare the transactions. Make sure you've got both effects in with the same transaction. So cash has its own section, just like sales is going to have its own section. And this is the easy part. Once we get into later chapters, we're going to have more sections added on. But in this case, we're just starting off. So received cash. So that's the other effect. So cash is an asset. Remember, the increases in assets go on the debit side. So there's the first transaction. Okay, so now we have April 2nd, paid cash for supplies, $415, check 1. So we already have April on there, so we only need to put the day. So that's a 2. And our account title for supplies, you can look at the COA, but it's just going to be supplies. So we'll put supplies. And that is check 1. So C1 goes in the document number. Now supplies is an asset, just like cash is. So any increase in supplies, company bought supplies, so supplies value increases. So that's going to be classified as a debit entry. So we'll put $415 in debit. And then paid cash. Cash was paid out, so cash is going to decrease. So that goes in the credit side. Then the other thing to point out is if you notice, we have opposite type entries with these transactions. Always a debit and always a credit. Just depends on what type of account it is. It's going to determine which side the credit and debit entries go on, but there's always going to be a credit and there's always going to be a debit entry. So that is it for the 3-1 work together. And 3-1 on your own is coming up next.